let's talk about oil. Oil's been moving up. It's at $86 as of today. What do you think about oil?
I think oil is looking very good. And again, what we're seeing in the oil market is very similar to uranium. There's deficits that are eating away at inventory levels, and inventory levels continue to drop. So if you were to look at the commodity market, generally speaking, inventory levels in the commercial inventory levels are almost a direct reflection of the price. And if you were to look back at $120 a barrel, back when we hit 120 in 2020, was that 2021? We um, we had inventory level, and we're only at 86. So I think that given the deficits that are most likely projected in 2023, if they come, we should continue to go higher in oil, and it should be just kind of a slow grind higher, all the way up to probably low 100s or something like that. And hopefully they can turn back on the taps and the demand cools off. Because if it doesn't, then you're going to be going way higher than low 100s. Um, so again, we pulled the SPR release in 2021. We pulled that lever. They released, I don't even know what that is, in total worldwide, quarter of a billion barrels, or no,
Yeah.
it's probably more than that. 250 billion barrels or something like that.
Yeah.
A huge amount was out on the markets there, and they got the price down to some extent, and now it's going back up. Saudi Arabia is pulling back on production, to some degree. OPEC is, and I'll be honest here, guys. Saudi doesn't have that much spare capacity. So if you get the momentum to the upside and demand continues, and let's say shale pulls back at the same time, or goes flat, they may not have the spare capacity. Just pull the lever back and stop the move to the upside. So we'll see. I think oil looks fantastic. I think the deficits are going to continue in 2023. We'll see what happens in 2024. We'll probably get $100 a barrel ish, somewhere like that, late this year, and hopefully they can control it. I don't think. I mean, the deficits are pretty big. We're seeing 5 million, 10 million barrel deficits each week, um, in inventory levels. That's what's getting eaten up. And it's like, man, this could get pretty interesting if they just continue to eat through inventories like they are for the rest of the year.
Yeah. I
So
like to, yeah. Yeah. So I like to point people to the fact that we shut down the entire world in 2020 and oil demand only dropped 15%.
Mhm.
Right. So that just shows you how ubiquitous oil is to the world. So how do you play oil? Do you use offshore oil drillers, or do you play the majors? Like how do you play the oil game?
Yeah, so I choose kind of the mid cap, small to mid cap guys. I'll say like the 500 million to 5 billion range. That's kind of the sweet spot, in my opinion, for risk reward. So we'll say small cap to mid cap size companies. They're very small in relationship to the big boys like Exxon and Chevron and those. I play the oil and gas exploration companies. I also play offshore drilling. I play even onshore drilling. I think that the energy service companies, given where their valuations are in relationship um, to gold and to oil and all these other things, they are very, very cheap. And I think if you take a long-term approach, you can buy these things pretty close to bottoms and just sit in them for 5, 6, 7, 8, 9, 10 years. I don't think that they're going to solve oil tightness in the market quickly. I think it's going to take time, and I think it's going to require the money to pass through energy service companies. So if we get in a very tight market, which I think we will, I think the oil exploration production companies will net that difference. And I also think more money is going to go after the energy service companies. So I think you can win using both of those sectors, playing oil or natural gas. I think they'll both be. You can find big winners in both of them.
Yeah, yeah. So here's the statistic that I was referring to. So this is oil demand stretching all the way back to
Mhm.
'05, and this is 2020. You would think that, after shutting down the entire world, you'd see something a little bit more extreme than a 9% drawdown in demand, right? So, it's just, you know, there's a lot of fear out there in terms of a recession, and a
Mhm.
slowdown in the economy and how that might affect oil prices. But to that point, I just say, well, here it is, guys. It doesn't get much more it doesn't get more recessiony than an entire worldwide shutdown, and yet you only saw 9% drawdown in oil at that point. So,
In '08, there was a little bit of a move lower too, '08, '09, as there was credit
yeah,
being destroyed in the system from the housing market. So I mean, you can see what the differences are there. It's not going to be a huge difference,
yeah.
maybe a million or two barrels.
Hmm. Yeah. So you mentioned natural gas. What do natural gas is actually one of my favorite plays. I did a video about it. I did a video across all the commodities, just kind of doing ratios, comparing them all against each other. My conclusion was natural gas was the cheapest amongst them all. What do you think about natural gas at the moment? It's at 250.
Yep. I
Yep.
think it's very good to be looking at natural gas right now. Here's the weird part. What people are going to say, this is what the average investor will say, natural gas is in a glut. I'm like, well, yeah, that's when you buy it. You buy it when it's in a glut and the price is really low,
Yeah.
and then you wait for the producers to cut back. They do less drilling, everything kind of shifts, and then when it's really tight and the market's way up there, then you have to evaluate. Well, I mean, is the problem going to get solved? The answer is yes. Then you got to sell when the market is tightening, but it's starting to balance or come more into balance. This past crash in natural gas was due to an anomaly in weather in Europe. So I think that if it swings to the other side, and I'm not stating that it's going to swing to the other side necessarily, but if the weather were to swing this winter to a cold winter in Europe, all this is going to look different very quickly. There's also other plays too where you can look at the price of natural gas and how that impacts certain industries as well. There's nitrogen fertilizers and stuff like that, where a large input cost is energy. And with Europe having such, I'll just say, a fragile market, and I think natural gas pricing is very fragile in Europe. I think that there's the possibility that weather could impact Europe. And then if Europe is producing a certain percentage of fertilizers, let's say, and their natural gas price goes up ballistically, you're essentially taking those producers and making them ultra high cost producers based off the input prices of their energy. So there's also plays in fertilizers and stuff like that because there's a large percentage of fertilizer companies in Europe that produce certain types of fertilizers. And if they produce, let's say, 20% of the entire market, well, now you're looking at it like, well, what if 20% of the entire market becomes a ultra high cost producer? What does that do to the other producers in the world? Well, it makes them low cost producers just based off of the energy pricing and natural gas pricing. So there's also those opportunities out there as well, where you can take advantage of certain fertilizer companies based off of their input costs over in Europe.
What about coal? Do you cover coal?
So I do cover coal. I think it's priced very well right now. I think it's cheap. It's gonna the weather is gonna impact coal just like it's gonna impact natural gas. The way that I would play it, my opinions only, and I know some people really like coal. I like nat gas the best. I know. So my brother, he's in the industry, the utilities industry. They replaced all of their coal power plants with natural gas power plants. The swing producer is kind of nat gas. If something happens in renewables and let's say they don't generate enough energy, they swing those nat gas plants back on and they burn a bunch of natural gas. If the situation gets dire enough, then I think they'll run to coal. and they'll start flipping the coal plants back on. So I'm kind of playing it with nat gas. That's where I feel comfortable. Nat gas is a very big, swingy type movement between the pricing, for nat gas. It's one of the more volatile commodities. And I still think there's a lot of upside for natural gas. I think that plan A, the renewables, solar and wind, I don't think they're going to do as well as what people think. And I think they're going to run natural gas on overtime. So I think the demand worldwide is going to be nat gas. And nat gas is going to grow into the future. And I think there's going to be some tight markets in the future with natural gas, dependent on the weather. So you can get some of these companies where you play almost an arbitrage of natural gas, where you buy them here in America or Canada, where you've got your infrastructure. They're building all these LNG terminals over the next 5, 6 years. I think we're going to get better connected to the overall market pricing of the world, and I think that it's going to drag our natural gas prices higher, and it'll drag the world pricing of natural gas lower, and we'll have more of an even pricing worldwide. That's from Goring and Rosenzweig. I completely agree with their assessment there. And at some point, we'll even see if we can produce the natural gas to fill all these liquefied natural gas terminals up. Because I don't know if we can 5 years from now with all the capacity that they're adding. So
Yeah,
that could also be interesting.
yeah, I mean, and you can't really go wrong with that plan, especially since so I've got coal here in teal and I've got natural gas here in blue. And I mean, they're very tightly correlated, as you can see here. So especially during the winter time. So one or the other, you can't really have a bad play there. All right. Let's shift over to the metals, precious metals in particular, gold and silver. What's going on there? Gold's been kind of stuck in this, 1900 and 1950 range for quite a while now. Silver's been in this $23 to $25 range. What's going on with those guys?
Well, we've got the yield curve that is stuck in inverted mode. So it's very inverted. It's basically just sitting down inverted, and it's just sitting there. Gold and silver do very well when the curve uninverts. So what they're doing is they've broken out of gold's broken out of its consolidation pattern. It's kind of sitting on top of everything. Silver's still coiling up. It's still, we'll say, with pattern, hasn't broken out yet, and it's just waiting for the right market conditions to take off. That's all it is. It's just waiting. It's sitting on top of its pattern, saying, I'll sit up here until we see the right market conditions. And that it may sit there for a while. It doesn't have to move, weeks from now or even months from now. It could sit up there for a year or two. It depends on what the energy markets do. If energy really kicks it here, if it really starts to kick up, that yield curve, I think, will stay inverted. So all the people that are calling for the crash, because what they're doing is they're looking at the curve, they're saying it's inverted, and then they run some sort of data on it where, maybe it lasts for 18 months or whatever the period is, and they'll say, oh, it's going to invert at this particular time. I don't think that's the right way to necessarily look at it. Almost every time the curve uninverts is from a problem in the market. If inflation is persistent, the curve will not uninvert, in my opinion. Something has to happen in the market for the curve to uninvert. I don't know all the potential possibilities out there, but if something does occur, whatever it is, I don't know what that is, people will run into bonds and the curve will uninvert. And we'll see it when that uninverts. You'll also see at the same time gold and silver start to go. So when that curve uninverts, that's when it rips. I can't see anything that I follow where the curve would uninvert from the real estate market. So when Powell says rates are going to be higher for longer, I think he's referring to the housing market. I think he's referring to inflation. And I think that he doesn't think that something is broken in the system, at least at this time. So he'll leave them up there until either the housing market breaks or until something else breaks. But I don't know what that something else is. People can claim that they know what it is. I don't think so. If they see it at this point, the market probably sees it anyway. It's going to have to be something that catches people off guard, and we should be able to see it. People are going to run into gold. They'll run into silver. It'll start to run up. You'll see the bond market uninvert, and when we see that, then definitely something's coming. I just don't know when that will be. It could be weeks from now. It could be months from now. It could be years from now. I don't know what that thing is. And people are trying to make predictions on when that will be, and they just continually get it wrong. And they'll get it wrong until something, until it actually uninverts, and then they'll say that they're right. So that's my opinions there. It's just waiting for the curve to uninvert, and then I think it's going to be lots higher.
Yeah, because a lot of these people make their reputation off like one correct call, and then they just coast off of that for the rest of their life. I think you probably know who I'm talking about. People like Michael Burry,
Michael
um,
Burry, yep.
Peter Schiff. Much respect to Peter Schiff. He was the one who kind of got me into gold and commodities back in the day. But he's been kind of in the same camp for quite a while now. But yeah, it's just you just got to get it right once, and you've cemented your name as an expert for the rest of your life. What about copper? Copper seems to be moving sideways, and copper tends to be an indicator of the health of the economy. What do you see with copper?
So copper's just moving sideways in its pattern right now. It's just been moving
Yeah.
sideways, sideways, sideways in a pennant formation. The big one. I don't know which direction it's going to break here. Inventory levels are really low. Yeah, if you just draw, one big, um, yep, that's the way that I would look at it and view it. Pretty much that,
Yep.
and it's just consolidating, and it doesn't have a clear direction yet. Just like yields are moving sideways, just like the curve is not inverting or inverting, everything's kind of just moving sideways. It's in a holding pattern. It's like we're either, we're at an airport sitting in the airplane and they're like, you're not ready for takeoff, but you've been sitting there for a half hour. Like, when are we going to take off? I think the entire market is kind of in that viewpoint where copper doesn't know where it's going to go. It's got low inventory, but are we going to break higher? Are we going to get a slowdown? If copper shoots to the downside, maybe we get a slowdown before heads higher. If it breaks up to the upside, um, then you know that the economy's doing all right, and we have inflationary forces, et cetera, et cetera. Um, Oil's already moved to the upside.
Yep.
So to me, it's like I think those inflationary forces are already there, and maybe copper's just lagging behind it. So difficult read on copper. I think it's confused on a slowdown in the real economy versus the economy kind of moving on higher. So I think it's caught in the middle. And if you have a stagflationary environment, it means that you've got inflation and you've got a slowdown in the economy at the same time. And I think that's what we're seeing with copper. It's telling us that, hey, this is a stagflationary environment. I don't know what to do here. You've got inflation going up, you got low inventory levels, but the economy is like, it's good, but it's not horrible. It's kind of just in the middle. So I think eventually copper is going to go way up because the deficits in the copper market out in the future they're still there. And Powell's trying to control all this with with interest rates going up and down. And I'm like, good luck, buddy. Good luck with that. Because, as you raise interest rates, money's harder to attain. It's more expensive. And if it's more expensive and you've got these big, gigantic projects, people are less willing to invest in them. So he's got this double-edged sword that he's playing with, and we'll see how that turns out for him. I'm in the inflation camp. I don't think he can get out of this. And I think that, yes, he can slow it down. Yes, you can delay the move if you just go around wrecking the economy or something like that. But I don't think he can hold it down forever. So he's in the okay right now. He's trying to delay everything, slow it all down. It's working to some extent in the housing market. And I think if we get another wave of inflation, I don't know what he's going to do. I mean, if we get another wave, is he just going to continue to raise rates to 10, 11, 12% and just destroy the economy and then cause a recession? And it's like, okay, so what's plan, what's the second stage here? They don't invest in this stuff. The free market does.
Yeah.
So I think they're he's kind of stuck, in my opinion.
You
This is
think,
going to play out no matter what.
yeah, yeah. Great point there on the cost of capitals and its ties to the inadvertent um supply shortage that it would cause. I mean, it's kind of like socialism 101, unintended
Mhm.
consequences galore.
Well, you also have inflation too. So the cost of everything is going up dramatically. The cost to build a mine is going to go up dramatically. So if you look at this, you kind of want something with existing infrastructure already in place, which then, if you look at it, the interest rates and the cost to replicate these mines and to replicate the equipment is a barrier to entry. It's a moat that's built around it for some of these existing and currently, companies that have existing infrastructure already in place. They have that moat already.
Yeah.
So I mean, we'll see where this goes. But if you don't get control of inflation and he keeps raising interest rates, he's not really helping the supply side at all. And the companies with existing infrastructure, they're gonna be raking this stuff in terms of cash flow and money.
Yeah. Yeah. Interest rates are pretty much just only tied to kind of quelling speculative booms and just tightening credit in that sense. But when it comes to the supply side, there's really nothing he can do. Whether it be, whether we just have a straight up inflationary economy or a stagflationary economy, commodities and metals are going to do just fine.
Yeah, and the demand, if you were to look at the demand, the way that I say demand is credit expansion in the system. That is what demand is. And he's trying to slow the demand down, but at the same time, he's kind of killing supply. So he's killing both sides of it.
Yeah.
He's slowing the demand, but then he's killing the supply at the same time. So I don't know how this is going to work out necessarily in the end for him. And I don't know if he's going to reach his desired goals of lowering inflation or not.
Yeah. It all depends on which goes down faster, right? Supply goes down faster than demand, then you could have demand going down. You could have a recession with inflation, which is by definition stagflation.
You could very well have that. And under stagflationary conditions, gold and silver have done incredibly well in those conditions. So we haven't seen it take off yet. It's sitting in that holding pattern. And I think it's just trying to figure out where it wants to go next.
Yeah. Yeah. Well, so Andy, if I were to give you $100,000 and said you could only invest this in one sector, what would it be? It doesn't have to be
Hmm.
commodities, it can be anything.
One sector, 100 grand. What do you want from the money is what I would say. Or is it just for me and whatever I want?
Well, okay, well, let's just say um for the purpose of from a gains perspective, from a capital gains perspective, not like a dividend portfolio.
Yeah,
So
because there's different ways you can play it, and every person is different with
yeah,
their own circumstance. So if you gave me $100,000, I could easily speculate and say, you know what, it's going all in uranium. I'm going to go for it and swing for the fence. If this is your only $100,000 and that you have no other money, and someone were to say, what would you do with it? Well, then I'd probably start looking at maybe a dividend paying, cash flowing company where I'm taking a lot less risk. So something on the lines of like a large dividend paying company in oil and nat gas. That would be one of my top picks. If you'd want to get out of the system, then I would pick physical metals. I would pick physical silver, physical platinum. Get my money out of the system. Don't want to play the dollar game anymore. I think they're really cheaply priced, and you can swap those metals as the ratios move against each other. So I think that game is very worthwhile playing. I think the dividend game is very worthwhile playing. And then your uranium sector, if you want to swing for the fence with a little bit more risk, I think that's at a great location to do that. I probably wouldn't do it in the gold and silver mining companies. They're very attractively priced right now. It's just they work under such little small market conditions, and they seem to come once every blue moon. So it's a very hard game to play and get right in the gold and silver mining companies because they work so little of the time. Even though I'm still going to try to play that game because I do think they could potentially work under the conditions that are coming. But yeah, I would say those three options. It'd either be uranium, depending on my situation, a big dividend companies over in oil and gas, or physical silver and platinum. Those would be my three top picks, or a
Got
mixture of all if I could.
got it. If you were forced to have to sell any sector in your portfolio, what would it be? If you had to, if you gun to your head, you had to sell. Which one would you have to sell?
Hmm. Well, if I had to sell something because I think that the opportunities were better somewhere else, I'd probably sell my diversified mining companies and or copper companies to rotate into energy and or precious metals or something like that. So I would probably sacrifice the economic type stuff in a stagflation and swap it more towards stuff that works well in a stagflationary environment if I had to do something. So I would reduce exposure to copper and add it to energy and or physical like metals, precious metals.
Got it. Got it. Well, it's been a really fascinating episode, Andy. Thank you so much for coming on. Tell the audience where they can find you.
Yeah, you can find me. I've got a website, finding-value.com. Bam, right there. You can also check me out on my channel, Finding Finance channel on YouTube if you want to check out that, Finding Value Finance. And you can catch me on Twitter as well, which is at finding_finance if you want to follow me there.
Yep. And we'll have all those linked in the description down below. Do you any parting thoughts before we sign off?
I would say be as patient as you can and live your life, not every day staring at this stuff. Live your life, go through it, load up when things are cheap and when people are not looking at it. So the best time to buy uranium was a couple months ago when everybody was like, what's this? A good time to buy, precious metals. No one's looking at it. That's generally the best time to buy something is when no one's talking about it and everyone's kind of, disinterested or the sentiment's really low. That's when you want to start kind of accumulating assets. So just look for things that are out of favor and aren't in the print, so to speak, in the news, or aren't on Twitter. It's
Yeah.
just accumulate things when everyone's kind of not looking. Quiet accumulator.
Man, do I really have to buy more of these stupid gold mining stocks? I really hate my gold mining stocks, man.
The gold mining
That's probably a good
stocks work
sign,
under
right?
very short
Yeah.
period. So it's very frustrating. So what I would do is the physical metals, they work pretty well, but you don't get the leverage. That's what
Yeah.
I would do.
Yeah. That was, I mean, that's the entire point. You always want to go opposite of your feelings, right?
Yeah, so a lot of people want to pile on leverage. They want to put on all the risk in the world, and it's like, guys, you're going to get huge returns if silver breaks out in the physical metal. You don't have to go to some small little junior mining company that has no money
Yeah.
in some obscure area, has no infrastructure, and is going to dilute you to death. It's like, time out, guys. Get the physical metal, ride that thing up. I mean, 1970s bull market in silver, it did a 50x. Do you really need more than a 50x? I mean, you know how much risk you took on to get that? Very little risk, very big reward. Dollar to 50 back in the 1970s. So, I mean, calm down on the risk. We might get another big run in silver that's ridiculous, or platinum. And with what little now in the physical metals, it's kind of like hit that button when it's low. That's what I would do.
Yeah. Well, I know of something that could potentially 100 million X, and that's a lottery
Uh-oh.
ticket, right? So it's like, I mean, you could just pile in all your money on lotto tickets. You could 100 million X your money, but at the same time, you're probably going to lose it all. So it's the same thing.
You could
Okay, there's
billion
more,
X, right?
huh?
Doesn't the lottery get up to $1 billion
Yeah.
sometimes?
Let's just say a billion X then, even better.
Yeah, even better. I mean, that's before taxes, I guess.
Yeah.
But you know, there's one person who wins in every single lottery, and that's the government.
Oh yeah. I've seen the meme where it says,
Yeah.
"Congratulations to the IRS for their 600 some odd $1 million in lotto winnings."
Yep. Yep. They just keep winning.
Yep. Well, hey, thank you so much for coming on, Andy. I really appreciate it. I know the audience will as well. If you enjoyed this video, please give it a like, subscribe, comment, like, share below. I know I said like twice, but be sure to do all the YouTube things I'm supposed to tell you to do so I can get more guests like Andy on the show. With that said, guys, I will see you in the next episode. Bye, y'all.